So here we are, again. Friday, April 11, 2025, the date of Mullen Automotive's fifth reverse stock split in just under 3 years. This one, like the last, is another 1-for-100. If you're still holding shares of MULN, the math is brutal. For every 100 shares you own, you'll wake up tomorrow with just one. And based on Thursday's regular close of $0.036, that means the theoretical post-split opening price will be $3.60. Now, if you're new to Mullen, that might seem fine. A higher price means compliance with Nasdaq rules, right? Sure. Technically. But in practice, it's a band-aid on a bullet wound. Let's back up. Mullen Automotive was once marketed as a bold, disruptive player in the US EV space. US-based assembly, potential government contracts, proprietary battery tech, and even whispers about next-gen delivery vans. But that dream has dissolved into dilution, and this reverse split is only the latest iteration of a strategy that's been bleeding shareholders for years. Let's go over it, because this is the fifth reverse split since 2022. July 2022, 1-for-25. May 2023, 1-for-9. August 2023, 1-for-100. December 2023, 1-for-100. April 2025, 1-for-100, effective tomorrow. Think about that. If you held 1 million shares in mid-2022, by tomorrow you'd be left with just a few dozen. And that's before considering the share price collapse in between. Here's what's even more shocking, each split came after massive dilution. Mullen has raised hundreds of millions of dollars by flooding the market with billions of new shares, issuing equity to stay afloat. And each time they do, the stock price plummets, which then forces them to reverse split to stay listed on the Nasdaq. It's a loop, a financial washing machine, and retail investors have been stuck inside it the entire time. Raise money. Crash the stock. Reverse split. Repeat. And just like clockwork, as they prepare to reverse split, they roll out another headline partnership. This time, it's a deal with Enpower Greentech Incorporated to produce a futuristic-sounding battery called the Swift series of semi-solid-state cells. Sounds exciting, right? Until you read the fine print, production isn't even scheduled to begin until early 2026. No confirmed sales. No production timeline for vehicles using the tech. Just a joint development agreement, some licensing language, and a lot of PR gloss. This isn't revenue. It's not operational traction. It's a distraction. A pattern that's become so predictable it's almost insulting. And what about the stock price? It's trading at 3.6 cents right now. Less than the cost of a gumball. And even at that price, it dropped another 20% this week alone, this time on news of Mullen's plan to register 200 million more shares for potential sale. That's the bigger context here, not just the split, but the dilution that follows. When a company reverse splits at a 1-for-100 ratio and then immediately sets up to issue hundreds of millions more shares, what do you think happens to price? Let's just say history isn't kind, and neither is the chart. This isn't just a failing EV company. It's become a case study in how retail investors get punished when dilution is the business model. And it's not just speculation. There's an active class action lawsuit in progress, alleging that Mullen misled investors, failed to disclose key risks, and presented a far rosier picture than the numbers supported. Multiple law firms are involved. And while we'll see where it leads, the fact that it's ongoing underscores the crisis in confidence surrounding the company. So what should you expect tomorrow, when the reverse split takes effect? Technically, your share count will drop by a factor of 100, and the price will increase by the same multiple, bringing the price to about $3.60 per share. But in all likelihood, the price won't stay there. History tells us to expect an immediate sell-off. Reverse splits, especially extreme ones like this, rarely result in upside for existing investors. Instead, they signal weakness. They telegraph desperation. And traders, the ones who aren't already stuck, know it. So don't be surprised if tomorrow turns into yet another bloodbath. And here's what really stings. This company was never supposed to end up like this. There was legitimate early excitement about US-based EV production. There was potential. There was energy. But what we've gotten instead is a masterclass in value destruction, one press release and one split at a time. They've now reverse split 5 times. They've issued billions of shares. They've diluted early investors into dust. And they still have no mass-market vehicle on the road, no material revenue to speak of, and no major fleet contracts being fulfilled at scale. Just more headlines. More dilution. More confusion. And now, one more split. So if you're still holding MULN, first of all, I respect your patience. But ask yourself, what exactly are you still holding on to? This isn't about shorts or FUD or manipulation. This is about a company that's run out of trust. They haven't earned the benefit of the doubt. And they haven't shown that they are serious about shareholder value. This is not financial advice. It's just a clear-eyed take from someone who's watched this unfold step by step. Final thoughts? Tomorrow's reverse split will make the chart look prettier. But it won't fix the business. And it won't fix the damage. The dilution train isn't slowing down. The lawsuits are still active. And the gap between headlines and reality has never been wider. 5 reverse splits later, it's not even a joke anymore. It's a tragedy. Thanks for listening. Let me know in the comments, are you still holding? Or has this final reverse split pushed you to finally walk away?